Recently, Yuga Labs, the parent company of Bored Ape Yacht Club, announced the launch of TwelveFold, an NFT collection based on Bitcoin, which has attracted market attention. TwelveFold is a collection of 300 generative art pieces engraved on Bitcoin blockchain satoshis, and the NFTs in this collection are minted through the Ordinal Theory protocol. Unlike Ethereum, which can mint many NFTs at once, each Ordinal NFT in TwelveFold must be minted individually in its own transaction and incurring separate fees. This requires buyers to have an empty Bitcoin address to receive the NFT. As mentioned in last week's video, the BTC ecosystem is quietly brewing, and although the true value of Bitcoin will not be its ecosystem in the long run, its secure and stable network, symbolic value, and new currency model are all much more significant than its ecosystem value. Yuga Labs, a giant in the NFT industry, is sure to bring a wave of NFT minting to Bitcoin with this trial. In addition, Ethereum founder Vitalik Buterin shared his personal experience with cryptocurrency wallets in public, exploring ways to improve crypto payment wallets. This week's Web3 newsletter will take you through these industry hotspots. According to CryptoSlate, 15 companies have issued 20 different stablecoins, forming a new industry body representing the market. The group, called Stablecoin Standard, will be launched in the coming weeks and aims to develop a set of standards to improve consumer confidence. Walker, the partnership relations lead at PoundToken.io, the first regulated issuer of a GBP stablecoin, said the group will represent the true international diversity of stablecoins today. Stablecoin standard currencies are composed of cryptocurrencies pegged to the EUR, USD, GBP, Yen, CNY, SGD, and CAD. They also include HKD, AUD, IDR, NZD, TRY, BRL, ZAR, CLP, ARG, CHF, PEN, ISK, and NGN. Bitcoin Magazine tweeted that the Russian Deputy Minister of Energy stated that Siberia will open large-scale Bitcoin mining centers. SEC, cryptocurrency exchanges may not be qualified custodians. According to CoinDesk, Patrick McHenry, chairman of the U.S. House Financial Services Committee, and Senator Cynthia Lummis, who drafted cryptocurrency legislation, sent letters to several banking institutions on Thursday, asking how they are handling a controversial notice from the U.S. Securities and Exchange Commission, SEC, suggesting that financial institutions should include their customers' cryptocurrency assets on their balance sheets. Last year, Federal Reserve Chairman Jerome Powell said the Fed was assessing the SEC's directive, which changed the practice of excluding customer assets from financial firms' balance sheets for digital assets. Yesterday, SEC Chairman Gary Gensler said that cryptocurrency exchanges may not be qualified custodians. Europe continues to strengthen its regulation of the crypto industry. According to Reuters, Margrethe Vestager, the head of EU antitrust, stated on Thursday that the next digital market to attract regulatory scrutiny will be virtual worlds accessible over the Internet. The UK mutual financial institution, Nationwide Building Society, sent an email to its members on Thursday announcing that it has limited customers' ability to purchase cryptocurrencies. The institution will not allow payments to cryptocurrency exchanges using credit cards and will limit adult current account holders to purchasing £5,000, approximately $6,650, worth of cryptocurrency per day. This move is in response to regulatory concerns about the risks of purchasing digital currencies. The volatility of Bitcoin and Ethereum has been relatively stable this week, with prices hovering around $23,400 and $1,646, respectively, as of the time of writing. The Bitcoin ecosystem has been slowly developing recently, undergoing cultural and technological changes. Currently, there are four main protocols active on the Bitcoin network: Lightning Network, RSK, Liquidity, and Stacks, with Lightning Network and Stacks being the most well-known and popular. While the Lightning Network ecosystem is quite comprehensive, there are still no particularly outstanding projects in the DeFi space. In contrast, Alex, who claims to be the pioneer of Bitcoin network DeFi, has been making frequent appearances, with his all-in-one DeFi service platform built on Stacks accounting for nearly 90% of the total value locked on the Stacks network. In addition to the popularity of Ordinal's NFT, it can be seen that the cumulative transaction fees for Ordinal's NFT alone have exceeded $1 million this month, with the highest being $100,000 in a single day, while the daily transaction fees in the Ethereum ecosystem are around 500 ETH, about $800,000. This difference highlights the halo effect of Bitcoin's dominance, as its ecosystem can achieve such high levels of popularity even before it has fully started to leverage its potential. If the foundation were to support its growth, it may not take years for it to catch up with the Ethereum ecosystem. As for Ethereum, the Shanghai upgrade is gradually approaching, with the successful activation of the Shapella upgrade on the Ethereum Sepolia testnet on February 28. It is expected to be released for the final round of testing on the Ethereum Go Early testnet on March 21, and then transition to the main network in April. According to the funding trends in the encryption industry on Root Data, since January, the overall funding rounds and total amount have slowly been on the rise, and recently, many projects have been updated and launched. The entire industry is gradually warming up, much like the current weather. From the perspective of funding types, more investment is currently being made in infrastructure construction. In the previous bull market, products such as SafeFi, DeFi, and GameFi generally received capital favor. Overall, it can be said that we are still in the very early stages of entering a bull market, which is a benign development for the ecosystem. During this period, people are focused on research and technological development, rather than being dominated by capital gains during a bull market. This is a great opportunity for the entire industry to improve. With the positive development of the ecosphere, those who have advantages in the next bull round may have or build infrastructure based on current research and technological innovation, such as the ZK sector on user privacy and security, Layer 2 on performance expansion, or LSD and other staking methods derived from POS. These have been mentioned in previous issues and you can go back and have a look if interested. However, the prosperity of the entire ecosystem or the judgment of the next bull market is certainly becoming more unconventional, realizing the transformation from Web 2 to Web 3 rather than within the Web 3 domain itself. The entertainment sector has the lowest threshold for attracting outsiders to join and participate. Now that Web 3 is gaining more popularity, more professional game producers and visual teams will join. GameFi 2.0, and some truly meaningful metaverses will bring the entire industry into a new milestone. Therefore, we can already see that many firms and public chains are beginning to promote and deploy in this direction. As a result, enabling users to transform their identities from Web 2 to Web 3 more securely and smoothly will also be a critical touch point. The more simple and secure it is for users to utilize, the more it will be sought after, and the social sector that follows will also be a hotspot. A bold prediction is that during the next bull market, the growth of security and innovation in cross-chain bridges or even public chains will result in higher interconnection and interoperability among projects and chains than before. But, this will generate hidden dangers of chain reactions, which might potentially become the thunderclouds of the next bull market. To mitigate such hazards, the creation of circuit breakers and insurance products may become a new path to pursue. Vitalik's personal user experience, how to improve crypto wallets. 1. Internet is not 100% reliable, and customer internet is less reliable than merchant internet. We need in-person payment systems to have some functionality. NFC, customer shows a QR code, whatever, to allow customers to transfer their transaction data directly to the merchant if that's the best way to get it broadcasted. 2. Simple and robust UIs are better than fancy and sleek ones. But also, most users don't even know what gas limits are, so we really just need to have better defaults. 3. UX around transaction inclusion needs to be improved, though there are fairly simple fixes. Good example, increasing the max base fee tolerance from 12.5% to 33%, and exploring ways to make stuck transactions more obvious in the UI. 4. Wallet developers should start thinking much more explicitly about privacy. Also, we need better forms of account abstraction to remove the need for centralized or even federated relays and commoditize the relaying role. Some other problems. 1. Many apps still do not work with the Brave wallet or the status browser. 2. The ERC20 transfers pages on Etherscan are very easy to spam with fakes. 3. Uniswap used to offer the really convenient functionality of being able to swap tokens and have the output sent to a different address. 4. Ethereum wallet is only available on one device. Coinbase has announced the Layer 2 network base, and most importantly, it is based on the OP stack. This news has directly caused a stir in the market, which also means that the competition between OP and Arbitrum has reached its climax. OP and Arbitrum are both Layer 2 solutions based on rollup on Ethereum, which extracts the execution layer and processes transactions in batches on this chain, and regularly reports the compressed results to the Ethereum mainnet with a consensus and data layer. It is also Ethereum's most favored scaling solution, which can effectively improve scalability and make transactions cheaper and faster. The two L2 solutions have been competing with each other. Arbitrum's daily active users are slightly better than OP. The launch of Base on OP Stack by Coinbase has undoubtedly added fuel to the fire of the ongoing Layer 2 battle between OP and Arbitrum. This collaboration will run all of Coinbase's on-chain products on OP Stack, making it a highly attractive option for developers. After all, Coinbase has over 100 million potential users and assets worth billions of dollars. For a blockchain, the ultimate goal is to attract a large user base. With enough traffic and users, developers will be attracted to build on the platform, and the ecosystem will become more prosperous. Therefore, the addition of Base to OpStack is a shot in the arm for the platform. In addition, Base's inclusion makes OpStack the second L2 chain, alongside Optimism Rollup, to be integrated into the superchain, which aims to achieve interoperability and composability among previously independent L2 chains. This development could further the narrative of rollup application chains, and we look forward to seeing how it will evolve in the future. Blockto, a one-stop cross-chain wallet that includes FT, NFT, and DApp, has secured financing. Looking back, in October 2022, Martian Wallet completed a $3 million pre-seed round of financing, and in January 2023, multi-signature wallet MSafe completed a $5 million seed round of financing. From this, we can infer that Wallets are generally the most fundamental business in an ecosystem, and their business models are also very clear. Wallet blueprints are gradually filling in the gaps, with Blockto's focus on cross-chain. Wallets provide underlying support for subsequent DeFi/NFT applications. Tsunami Finance, a decentralized spot/futures trading platform that has gained the favor of investors for on-chain derivatives trading, following the success of GMX. This is the second hardware acceleration enterprise to secure financing this month after CISIC. According to Chain Reaction co-founder Alon Webman, the Electrum chip is designed to carry out blockchain operations known as hashing very quickly and efficiently. According to its official website, the product targets mainly digital currency mining like Bitcoin and privacy infrastructure solutions. NeoSwap that supports Bitcoin stacks NFT secured funding. According to data from Dune Ordinals, inscriptions on Bitcoin, the NFT minting on the Bitcoin ecosystem has recently surpassed 10,000 and the created transaction fees have consistently exceeded $1 million. Compared to the current daily transaction fees based on Ethereum DX revenue, which is around 500 ETH, it can be seen that the market is gradually becoming more active. As the Bitcoin ecosystem heats up, the Stacks NFT ecosystem project, NeoSwap, has secured funding, which mainly aggregates NFT trading platforms on Solana, Polygon, and Stacks. See you next week.